Hello guys, you are welcome to today's episode. Today I am going to be analyzing US oil. US oil is part of CFD and is a highly volatile pair to trade. But if you know what you're doing in the Forex market, you know how to navigate the Forex market, and which is why I'm here. I got it covered. So watch to the end of this video. When we return, I will dive deep into analyzing the US oil. If you've been following that, price action is the king when it comes to trading of any pair, and US oil is one of the pairs that price action works perfectly well with. When it comes to SMC, there are some pairs that SMC work with perfectly well, which I'm going to treat in my next video. The pairs that work so well with SMC, you can never go wrong using SMC to trade with those pairs. There are pairs that don't just work with SMC, price action only. US oil is one of them, and today I'm going to analyze this market so that I can start see how first of all, support and resistance work so well when it comes to US oil. Support and resistance is a very old strategy which a lot of people are neglecting these days because of so many other strategies that's popping up. But I tell you, stick to one strategy and you'll make a lot of money. Master it, perfect it, and you will make a lot of money. Now, this is US oil and this is monthly time frame, and what can you see happening? So let's start from the very beginning market structure, which is top down analysis. So what can you see right now? Oh my god, can you see that wick? This is something. This week something. This week shows that this market went down deep to this level and went back up. That is the volatility we are talking about when it comes to trading of these pairs. Okay, so currently the market is uptrend, going up. Obviously it's going up, but something is happening around this region. Take a look. Now what is that? Consolidation is not trending. Alright, so let's check weekly to know what's going on. The same thing on weekly. So you see, for you to trade this kind of market, it has to be strictly price action. SMC cannot work with this kind of movement. It's not trending, it's consolidating, it's going up and down. But if you know what you're doing, you would know that the market right now is buying. Why do I say so? With my strategy, high, low, break. Now you see, this is a low and this is a high. It could not break this low. Let's see if it can break this high. So you see, it couldn't break this low, which is why it started going up. Now, when it gets to this up, let's see if it will break it. If it gets to this up and break it, that means it's coming here. If it gets to this up and is able to break it, that means it's coming here. So if you want to trade this kind of market, I am the catching impulsive move kind of girl. So I like to catch the impulsive move, the beginning of every impulsive move. So what I always do to any pair that works well with price action is to look at the low and at the high. So when the market was here, last week over the weekend, I was looking at it. I know, is it gonna break here? So since it did not break here, I hop into the trade. Like I told you, trading is a risky game and you must be willing to take that risk. But in taking the risk, make sure it's a calculated one. Don't just risk anyhow. And I'm of the opinion that it's not always good to jump into any trade in the middle. Target the beginning of every impulsive. That is where you want to risk. So if you're risking there, then you know that you're risking a very good risk. If you work out, fine. If you don't work out, you're not going to lose so much. So you put your line at this low. As soon as the market opens, you jump in immediately. The reason is so that if it's going against you, the drawdown will not be much and you will not lose so much if you start from the beginning. Don't wait to see confirmation, because it's all this confirmation of a thing that people are waiting for is what that will make them to start losing money, because as soon as they put that stop loss, it will take it. It will take it because by the time you see you're able to get confirmation, market has already gone halfway. So you decide to take the risk from this low. All you just need to is make sure you identify a low from daily, even from 4 hours, daily 4 hours. So if we are able to identify any low at all, daily or 4 hours, it's always valid. So look at this very low, and of course it has to create low and a high for it to work. Now it has created this low and it created this high. So at the time market was here on Friday. So on Sunday, this market opened. Of course, the market opened here. So if the market opened here and later pushed down to this place, you see that what the drawdown is not going to be much, and which is why I don't use stop loss. So I only put a line and plan for my exit strategy. I have a plan for my exit in case if it didn't work out, then I know exactly where to exit. So you see, the drawdown is not even much, just about 4 pips moving. So you see, you enter the trade as soon as the market is opening. Yeah, this was where it opened. This was where the market opened, and it later pushed down here, and then it continued moving up. Alright, so if you had entered the trade, yeah, quite alright, and then after the whole day, you are seeing a profit already. So you can decide to take your profit or keep holding. When you're using this method, don't try to break even. You can only break even when a structure is broken. That's how to break even. If you break even when it hasn't broken any structure, you are bound to be stop out, and we don't want that. So let's go to 4 hours. So this is 4 hours. As you can see, this was the low we are looking at. Okay, so you see, this was the low. This is the low, and you can see it did. This thing is a fake out. It's not a real breaking, because see, the candle is small. That's why I like to work with daily. So as it broke it went up. It created a low and another high. You put a line. This is where you will put a line. You put a line here. Remember, as soon as the next candle pop, you're jumping in immediately. So you put a line here and you're watching to see if the next candle or any candle will come and break this line with the body. If you break this line with the body, that's your exit. But if you did not break this line, this very line that you put with the body, then you will have to hold the trade. So as soon as you break this high that it has created, you can add another position. You must not trade every day, but the day you're going to trade, of course, I'm giving so much value on this channel, things that you could have paid for, but I'm giving it free. This strategy works on Monday. Only on Monday, at the beginning of the opening of the market. It works on Monday, it works on Tuesday. Monday, Tuesday is guaranteed. From Wednesday, Thursday is no longer guaranteed. On Monday, Tuesday, perfect. If you're able to catch this impulsive move, as soon as you catch this impulsive move and you see that it did not break this low, you can add another position here. As soon as you break this high, you add another position, and you're looking at your target is here. This market will get here. So as soon as it gets here, so you can see Monday, Tuesday, Wednesday, you're still in the trade. So what you will have to do is that you can close two positions and hold one, because you entered one. Don't enter so many positions at the beginning. You entered one, and this one you have to minimize your risk. So the place you're going to risk higher is here. Why? Because you have seen that it's not breaking this low. So you now enter. You can now increase your lot and enter the second time. As soon as you break here, you enter again. So when you break here, you enter again with a minimal, a reduced risk, because as it break here, it can actually come down here again before it goes up, or it can continue going up. So what will happen is, as soon as you break here, you enter again aggressively. Your target is here. This is where you're going to close all your positions. So you close this and this first. This is the one you're going to hold till here, depending on your risk appetite anyway, the size of your account. So if you master this strategy, you're good. So let's see how this market will play out till on Friday. So after Friday, you do your analysis on Saturday. So I'm coming back again to give you the feedback and the results, and we are going to all look at it together on Friday, Saturday rather, on Saturday, so that we can prepare and plan for the coming week. That's how to trade. You do all your analysis, you analyze the previous market starting from Monday to Friday, then on Saturday you do your analysis and prepare and plan for the week that is coming. And one thing about this strategy is that once you miss your entry on Monday, don't try to enter in the middle, like where the market is at. It's 50-50. If you're entering from here because it broke this structure, it's still okay, but note that it's now 50-50. So it can push up or it can push down. 50-50. So it's always better you target. I hear a lot of people saying, I don't trade on Monday, Monday, blah, blah, blah. Is the day to find out where the movement of the market. No, it's wrong. You would have found out the next move of the market from Saturday, because you've done your analysis for the previous week and you're planning for the next week. So I take my trades majorly on Mondays. So keep practicing and keep analyzing and take that bold step to execute at least from the very impulsive move. And even if it go against you, you'll see that what you're gonna lose will not be much. Rather than entering somewhere, the market has moved here, you're trying to enter here, then you now start having a big drawdown before the market, and the drawdown might blow your account if you're using a small account, or it might give you heart attack and panic and all of that, you fear and close your trade. That is why a lot of people are not making it. target the beginning of every impulsive move. That's it for me for now. See you in my next video. Bye for now.